Like there's the Chinese proverb, the Sun Tzu proverb, like be like water. Water never tries to go uphill. Water just goes to the level it's supposed to go to. So it's kind of like if you've ever poured cement, you just pour it and like you fill the cracks, right? And I think that's what this will do in maybe developing regions, or like if you take A, B, or C level economies, this will fill some gaps there.
So our competition, our direct competition, Redfin, Zillow, and all these other guys, realtor.com, they're spending money here. But where we win is if we go into the niches, into the long tail keywords, right? So here, I wanted to show you that. Let me go back to this, because as soon as the ad pops up, I click on it.
Look at those faces. That's how we went live on Facebook. I love it.
Yeah, you want to be careful, especially the stuff Teresa talks about. It kind of scares you to death. Like, maybe I better wait until the SEC.
Well, that's a great lead in. So if you're going to probably, many of you are going to watch this later. So welcome. If you're here on the back end and Zoom, I see you, Jeremy. Welcome. Thanks for being here. And if you're live, if you're watching this on Facebook and you didn't see the beginning, you're going to want to rewind and watch their faces, because I had asked them if it was the right time to invest in Ethereum, which this is not what this is about. So if you're new to this is really nothing about crypto, actually. And this has continued, the conversation has evolved into one that's way more about blockchain and how it's going to affect our industry. But NFTs also play a role in this, and minting properties. And I think we'll talk about that a little bit today. But specifically, what we want to talk about today is Consortia's recent conversations with the Federal Reserve. I think that's very interesting. Oh, by the way, this is our Consortia team. This is Teresa. This is Sheila. Sometimes we have a few others that join us. But we're talking about how blockchain and NFTs and crypto are going to have an effect and an impact and be integrated in to the real estate world in the not so distant future. And so we're going to talk today a little bit about their conversation with the Federal Reserve. We're going to talk about Ethereum and how potentially it's being regulated and how that might have an impact on all of the things that we're talking about. And also NFTs getting regulated. And also, and I think it's important for us to bring up, maybe talk about the whole minting process. And if there's anybody on this call who might qualify as somebody who might be a beta user with Consortia on minting their properties. Let's make sure we spend some time on that today. But let's start with quick introductions. I'll let you guys take it from there.
Hey everybody, my name is Teresa Grobecker. I'm the CEO of Consortia. I am the resident industry nerd on blockchain.
You were a monkey. You were a monkey last month.
I can be that too. I'm pretty happy. And here's my human translator. Her name is Sheila.
Exactly. So I'm Sheila Fageron. I'm COO of Consortia, and I am the Teresa translator.
And that's if you don't know, that's really more for me, because I don't understand half the things Teresa says. So let's talk about your conversation. So you guys are having conversations with the Federal Reserve. That's kind of cool.
No big deal. I mean, yeah.
Go on. Like, tell us more. How does this apply? Go on.
Okay, so if you guys have taken the Consortia designation that Sheila forced me to shoot for the benefit of the industry to be compliant with all the things that touch Web 3.0, there was an article that was written 34 years ago by The Economist. It was in The Economist, which we know is run by the Rothschild family. And in this article, it says that there will be a single global currency in 30 years. And in 30 years, it was 2018, and all these ICOs were blowing up and popping up all over the place. So things happen, right? Bigger minds than ours are working on solutions. I think it was like 3 weeks ago, I was sitting at the NAR's Portfolio of Companies Summit in Vancouver, and I'm getting these texts starting to come in, and the first one says to one of our Blackstone partners, they have a whole portfolio of companies. And we're on this texting chain, and it says that Chase wants to work with Consortia. And I'm like, oh, that's cool. Like, that's very cool. And then within a few minutes after that, two of my $1 billion family offices that I'm friends with and advise once in a while, they were like, hey, FedCoin was announced. I'm like, ooh, let's see what this is. So then read that, and my mind goes instantly into robot processing mode. I'm like, how do we future-proof? This is early. I know I predicted it. We were in Inman saying this, like top page, front fold, right? But oh my God, here it is, right? And it's I was like, wow, what was my actual plan around this, right? Like once it was announced, I was like, oh, I forgot to make a plan. Like I knew it was coming, but I forgot to plan. So then I asked all my friends at Blackstone and at NAR, I was like, please get me a meeting with the Federal Reserve. And I'm like super fortunate in life to have like really awesome friends. And so we got a meeting with the Fed, and it was a big meeting. And so now we are in talks. That's how I'm supposed to say it. We are in talks with the Federal Reserve to do a few things, which is to settle real estate through consortia with banks to fund mortgages. Get this, 24/7, 365. Think about that. No more wire cutoffs, 24/7, 365. Earnest money deposits, instant transference of money. The other thing is like pushing all NAR companies onto FedNow for all instant settlement. So they're going to bring down the reason for FedNow. Let's go into that actually, is to make banking and money transference more affordable for all people, not just for like, the 1%ers, the $1 billion families. No, it's not for them at all. In fact, it's for the everyday consumer. In fact, people like on social benefit. That's where this comes from, because the poorest of the poor in this country pay up to 20 to 30% of their top line revenue just to have access to banking services. Just to do that thing, like I'm going to pull out a credit card and I'm just going to swipe a credit card. They don't have access to that. So that is really the purpose of FedNow. So if you're able to like bring it in for the poorest of the poor, then all the merchants, like it's a flood up kind of effect, where then the merchants have to accept it. And then the banks have to accept it, right? Like we all have to get on, if like for the benefit of society is on this better payment system. So it's really cool to be part of that conversation with FedNow and to, at the end of the day, bring a better customer experience. Because if you know that loan can get funded, and then also we might be working with counties, I don't know, that might be happening. But like if you can go on to title recordation immediately, then we can get humans into houses like in real time and not be like, oh shit, man, where are we living? It's Friday at like 5 o'clock. Did we close escrow, right? So we just want to do better for the consumer, move money faster.
Sheila, anything to add here?
Yeah, because unlike Teresa, I didn't start on the blockchain side, I started on the crypto side. So I researched thousands and thousands and thousands of hours about that part of the industry. So I saw the government making moves a number of years ago, and there's something called Ripple Labs that came out with a coin that has been literally under SEC investigation for years. And one of the things that has been projected is that that's going to be the movement of money in the future, because it's similar to an ACH or SWIFT, just automated money movement around the globe. And the projection was that the Fed was holding them down so that would future proof for when they were ready to release the coin to be the future movement of money. So when you look at it, it's very interesting, because over the last few years, many people from the SEC that were high-level executives retired or quit their jobs and became board members or executives of Ripple Labs. Shock how that happens. So what Teresa and I have talked about is that another article came out actually in the last week that talked about a lot of the movement of money isn't just the payment processing, like what Teresa's referring to. It's also like the cost of the fees. Like even for us with our training programs, we're paying 2.9% to Stripe. So you start thinking about the billions and billions and trillions of dollars that these companies are making, like Stripe or whoever, just in the fees of the movement of money. And if that can go away or close to go away, how does that change banking for the world? How does that change processing of sales for the world? And so I look at it from a more of a global economic perspective, where what consortia can do is work with the Fed now, be the movement of money or movement of property data or properties through the consortia blockchain. Even if we worked with a Ripple Lab, we could do it ourselves. Honestly, with Teresa's background as a banker, she's able to do that. It's just, do we want to do that? Do we want to go to that level of actually being a payment processing blockchain system? Because she would have to do some other legal things to put that in place. But you just see it happening. You see what's happening with the government. You see that movement, the whole Ethereum thing that came out. It is shocking. I told Teresa, I said, it's funny, they've been waiting all these years for Ethereum to come out with their version 2, because the biggest complaint has been about the fees and the gas fees for Ethereum. And they kept promising, wait until version 2 comes out. It's going to really reduce the fees. Ethereum's the main platform that most people use to build their products on, right? Their assets on, different companies that are doing crypto. I said, shockingly, right after Ethereum announces that their version 2 is released, they get slapped with this SEC thing within a week. I mean, days. They literally just announced it. So when you start looking at, the puzzle pieces putting together about, like Teresa saying, there are much bigger minds and much bigger money involved on a global scale and all of this stuff. But how do we all learn it, and how do we work within it to be able to sustain moving forward in the future? So that's my view of it.
Did that help, Jeremy? Because you were the one asking what we're all thinking. But so first of all, and let me just say this too, those of you that are on Zoom, if you have questions, please ask them here. I'm telling you, there are no stupid questions. I'm the dumbest one here. So, and I'm just going to be asking dumb questions. So as we unpack that, we're talking about the future of currency. How is that going to impact our industry? Well, what's the relevance?
So for our industry, it means that we are all going to digital. Here's what I think about, because I'm doing a mortgage right now. And it's a bank statement loan, and they have money in like 25 billion accounts, I feel like, and the process is super painful. So just think about how we've gone from paper statements, right? And you like literally, like I had to like go through old folders the last month. I've been cleaning out, like when I finally make it home, I try to clean up my house, right? And I'm going through old documents. Last year, I got this 86-year-old woman a loan, a 30-year mortgage. Jeff, you're in mortgages. Like, I don't know, just like I work miracles. Like if you have a loan in California that you can't get done, like I will like sift it. I can't believe I got that one done. Anyway, she had all these paper documents, right? So now we've gotten to PDF. Usually clients send PDFs. And then now we have print screen, right? From like your online portal, you can do print screen. And that, like even this for like tech heads from Silicon Valley, my clients are tech heads. They're like, what do you mean print screen, right? So we're taking this all digital, like, and then Sheila and I work with companies where they can automatically pull the records, right? That's the way it should be. I don't even know why we're doing print screen. It's like embarrassing. I feel like that's dinosaur, right? But you can automatically have you ever signed on to a banking app and it says, oh, do you want to sync your bank accounts, right? And you're like, oh yeah, I want you to know what that, I mean, maybe the people on this call have, but that's the direction all of this is going. And so like, even just, I pulled out a paper dollar, like this is what we're talking about. This is going to be obsolete. This is literally what I'm talking about. You won't have this anymore. Everything is going to go digital. In fact, this was kind of cool. I was driving with my kids and I was like, Mommy just had a phone call with the Federal Reserve. And they're like, no one cares. And I'm like, no. I was like, Grant, pull out $1. So from the backseat, and my kids are freaking out, right? They're like, can you just focus on the road? I'm like, no, you have to understand this. And I said, Ben, read what this says. It says Federal Reserve note. And so I said, this dollar, right? If you have $1 in circulation right here, And if you have 10 real estate companies or 10 banks that need to settle a note somewhere in the world, right? What happens to the value of the dollar? If there's $1 here and 10 people need to use this $1, the value of that dollar goes up, right? That suddenly becomes much more valuable to us. It's just like if you have one house for sale and you have 10 people who want to buy it, that house becomes more valuable. So that is what this will do to the American economy. It will make our dollar, because we're going to settle, as Sheila was hinting at, the whole world needs a global currency. Then you're going to get rid of, like, you have guys ever travel and you have to convert, right? There's a conversion rate for your currency. We're going to equalize, right? And then banking services will be available to other countries. We'll be able to bring stability because of a strong dollar. No big deal. It's like a Miss America speech, right? Like, just
how are you going to get all these countries like, you know, England, for example, who's been using the pound forever to, I mean, there's a reason why they haven't gone away from the pound. How are you going to get everybody to agree to this?
Yeah, so I don't know that there will be a single one, right? I think that's probably like an oversimplification of what's going to happen. I was just doing screenshots last night while I was flying to Sheila about which ones are currently in use. So you've got China. China already has a digital currency. And then we know that Europe has like their zone. The Swiss, they adopted one as well, right? So you have certain banking systems in the world that are very advanced. And we're not going to go after those with this Fed now, the Fed coin. But there are many places in the world where they don't have stability in their banking system.
Sure.
And I think, like, there's a Chinese proverb, the Sun Tzu proverb, like, be like water. Water never tries to go uphill. Water just goes to the level it's supposed to go to. So it's kind of like if you've ever poured cement, you just pour it and like you fill the cracks, right? And I think that's what this will do in maybe developing regions, or like if you take A, B, or C level economies, this will fill some gaps there.
Okay, so let's go back to the original question, which was, all right, how is this going? What impact does this have on the real estate agents that are watching this, and why should they care?
I think that you'll see more business as a result of this. If there's a single currency to settle in, it's going to be easier to settle your deals here. You'll get those statements, right? The money's going to be much more fluid, easier to understand. Was that a cash deposit? No, it was a wire. Where did it come from? All the sourcing will be on a ledger, right? It'll just be like one ledger that shows the sourcing of all the money. It'll be easier to do loans, right? Jeff, you and I are loan officers. Oh, that's okay. Got it. That's the record. It's easy for a robot, like the actual, not me, but like an actual robot to read that, the artificial intelligence. And then I think if you do any amount of international business, you're not going to be playing this arbitrage game between different currencies. And so it'll be much easier and more fluid for your clients to buy and sell real estate.
First of all, let me clarify. I haven't closed a loan since 2012, just for the record. So you're probably 10x smarter than me in that too.
You're breaking my heart here.
I'm just a professional marketer. That's all I do anymore. Okay, so let's go back to what Jeremy said here, which is important, which is that this will change the way everything is researched and the way you access files and the way, the way we think a property is titled, right? What does that look like in the new world in the blockchain, and what is that impact also, which is a positive one, to the real estate world?
Funny you should ask. I've been on a few very late night calls with my $1 billion family offices who want, right? So they want a single register for all liens and title. So did you know, I didn't know this, every single airplane in the world has to be registered in one place in Omaha. If it's not registered there, the lien does not exist. You literally don't own that airplane. It's really crazy. And this one family office, they're all connected, right? They all talk to each other. It's very incestuous, but they, in several calls, have prescribed that is what is wanted. Because if you think about it, most people don't own their house. The bank owns the house. So it's in the bank's best interest to make sure that their claim on that property is true and accurate, which is increasingly hard to have if you have all these counties. Some are on paper, some are not, it's really cumbersome. So, I mean, these families fund the banks, right, that write the mortgages that are our sponsors. And so this is coming from the people who really own most of the land and the mortgages in the world. So that's the direction we're going. And consortia is like really in lockstep. Like the things that I wrote on a white paper, like at 1 a.m, like 5 years ago, seem to be spot on.
Sheila, do you have anything to add to that, or before we keep going down? I don't want to leave you out here.
No, I appreciate that. I just think there's, it's hard on a call like this. There's so much information. When you
Mhm.
think about what your question was about, how will it affect realtors or any agent watching this? It's going to affect everything you do, because the process that we're doing that we teach you in our course is that the pilot that we're working on with Fannie and Freddie and VA and HUD are to literally do the entire process up front prior to you listing a property, so that you know what it's appraised for, you know the condition of the property, all the title, clouds, and encumbrances have been resolved, and the buyer has been fully financially vetted, so you know exactly that they can afford that property prior to them actually putting in an offer on the property. We're trying to fix, or ultimately what Teresa and I's goal is to fix all the broken parts of the process. We've had a broken process for literally since the beginning. And so we're working to solve, and that's what blockchain does, along with all the partnerships that we have, is that if you have a ledger or a store of data or a vault, so to speak, with everything you need to know about a property to make sure you make a good decision about whether it's a good investment for you and whether or not you can actually afford it and make the payments, your ability to pay scores, how much better will that be for the consumer, for us as agents? No, my thing to the Fannie when we talked to the guy who writes the code was, listen, I'm not trying to just move the process. I'm trying to literally change it, because for us agents, if I know what a property is appraised at before I put it on the market, how much better is that for me? No more fighting with the sellers with trying to overvalue their properties. No more shooting. I tell Teresa all the time, I feel like I'm throwing darts at a dartboard. I said, our whole industry is based on throwing darts. You don't know what it's worth. You don't know what's wrong with it. You don't know what it's going to be valued at. I mean, it's just crazy when you think about what we actually have been doing all these years. But if you take all of that away and it's full transparency on every side of the transaction, how much better is that going to be for all of us involved? And then to have all of that data, because if you think again about the process, you have all these different companies and people involved, and they don't share. Like, oh, don't send the lender that. We don't want him to know that something's wrong with the floor. Don't, hide that information, or the seller lies on their seller's disclosure. It's just nuts the way we've been operating. But if you have full transparency, if you have the ability to know and make good decisions about if you want to overbid on a property and you have to bring the cash to close for the difference, and then if you have the ability to settle immediately by transferring your wallet, your amount from your wallet that somebody mentioned in the chat about AML and KYC, that is all layered into the blockchain. And the Fed now is gonna do AML and KYC. So the funds are good. They've been vetted. That it's been proven where the funds are coming from. And then your people literally can have instantaneous closing without having to worry about having that truck, like Teresa said, sitting out in the parking lot and they're crying in tears to you because they can't close on their house because you missed the wire transfer by an hour. And then where are we going to live? I've got 2 dogs and 4 kids in the car, whatever. But that's how it's going to impact agents. It's going to help you function at a higher, more professional level. It'll help you do a better job for your clients. It'll make your job a lot less stressful and help you be more efficient in the way you work.
How is it not going to replace humans? Because that is, and Jeremy says that. How is it not going to replace that? Because it sounds like it's just going to simplify a lot of things. So touch on that. Why is this not going to replace us, or will it?
Well, the truth is they want us involved. Teresa can talk to it, but they want an agent, a human involved with the relationship.
Who's they?
Government, secondary markets.
How
Yeah,
can we?
also like
Good.
this work that has to be done to get the listing done, we're not taking the human out. We're saying do a better job up front. In San Francisco, this is how we sell real estate. The inventory better be flawless before it goes on the market. Otherwise, like you lose street cred immediately. I'm not saying I'm good at it. I'm just saying the expectation. Like that's what you're supposed to do. So all this homework about the house, packaging the house, doing this, right? Like doing the walkthrough. You're the agent, go do your job, but go do it ahead of the listing going on the market. We're not saying get rid of the agent, but here's the thing is the consumer is voting with their feet on this one. And they're telling us, so I know the family office that put $500 million into Open Door. And that family office told me that within 3 years, they're going to have 30% of the market. Guys, like if this doesn't like rattle your cage, you're not paying attention. And to this person, I said, I like looked at him like, you're full of shit. Like, really? You think 30%? And then what happened? They announced the merger with Zillow, right? Their partnership. The consumer said, it's okay. I don't mind walking away from a little bit of money that's on the table. I have a better experience with Open Door and Zillow. Think about that, guys. We're not doing our jobs well because we're not transparent enough. They're willing to take the haircut on the amount of money that they're going to clear on the sale of their house because they know it's going to be a better experience with Open Door. So I don't know, we could just lay down and give all of our business to Zillow and Open Door. I really like that family office, actually. His son is like a really great athlete and a nice human. Like, it's okay. I'm fine giving him my business, but are you? I don't think you are. So, I mean, the consumer has said they want something better. I think we have to level up and say, okay, how do we do better for our customers?
And it's not a haircut. It's a lot of money. Like the consumer is losing a lot of money working with these companies because of the ease of the process. So think about that. If we can focus on doing an ease of the process that takes away the pain points and helps it to be smoother and faster for them, we don't have to have them lose money. They can actually keep their money with us because they're not paying all those extra fees. But with our process, they can close in 7 days. 7 days, complete closing, because everything's done up front. We just have to follow TRID for the 3-day rule, but we can have closing done in 7 days. We can even layer in for that seller to do a lease back or a rent back or whatever if they need more time to get their stuff out. But how amazing is that for the seller to be able to know that you can have the same process done by us without paying all the extra money. And actually, they're not even doing the process we're doing. They're not doing title appraisal and all that up front. We are. So we're able to bring a better process for less money in a shorter time frame by doing it the way we're doing it.
And as a follow-up to the comments about the process going faster, that's got to eliminate how many hands are on deck on the mortgage process, correct? So we are, and this is a positive thing for a real estate agent and a loan officer. It's not positive for that person in the trenches because now they lost their job. The processor, the loan officer assistant, the underwriter. Like there's going to be, if you're closing a loan that fast and you have that much access to data, you're not going to have as many hands on deck searching every record under the sun. And this, Teresa, I know because I manage our P&Ls and I see every expense under the sun that it takes to close one mortgage transaction. It's insanity, the amount of money that it costs. Most people don't realize this. But I assume that a lot of that's going to be eliminated because of how this whole process works.
And Jeff, I think that's the problem, right? As industry professionals, we're always thinking about me, right? Like the person who's the process. That's who's paying for that? The customer is. So who are we here for? Like, are we here for the customer? Or are we here for
everybody on this call is in it for themselves. Let's not, I mean, that'd be it. We'd be lying. And if anybody says they're not in it for themselves, you're lying because Yeah, you might love your customers, but you're in it. You're in real estate because of the flexibility and the money that you can make. Let's be honest. You're in it for yourself. That's why we're here. That's why I'm asking the question, though, because that is a good thing for a real estate agent to think to themselves, wow, this is going to be smoother and faster.
Okay, let me say this. As a loan officer, do I want to spend, and I've spent every day for the past 10 days, 3 hours a day, tracking down statements.
We do it all the time.
Okay, all the time, right? So do I want to be doing that? Or do I want to be spending that 3 hours going and finding my next client?
Making TikToks. Go on. Yeah.
You and your guys, Jeff is going to have me doing TikToks. I swear. Like I'm going to pull out the garbage can. Or do I want to spend that time with my kid or volunteering in my community?
Yep, that's what I was going to say, is that it's not going to get rid of those people, Jeff. It's going to make those people more efficient, because you think how many calls and emails a loan officer takes chasing people down just to get the rest of the file put together. And if that file can be put together for them so that they can focus on getting the next file and the next file and the next file. Same thing with the agent. Think about this. If you're a listing agent and you work hard to get that listing and you are holding your breath that thing's going to close.
Mm-hmm.
Over appraisal, it can fall apart.
Mm-hmm.
Repairs can fall apart. Title, it can fall apart. Buyer financing, it can fall apart. There's lots of reasons why your listing can fall apart. But if you as a listing agent can say, okay, Mr. Seller, we're going to do a brand new process with this Fannie pilot that we're doing, that we're going to do everything up front for you. It's going to save you money and it's going to save you time, because you're not going to be sitting on the market for 30 to 45 days after the time we get a contract to see and pray and hope that it closes. We're going to know that it can close. We're going to know the right person to pick a contract for. We're going to know we're going to close you in 7 days. Thank you very much. I am doing my best to protect you and take care of you and help you get a smoother transaction and get your money faster. And then I can negotiate how long you stay in the house to help you find something else. But how much better is that as an agent? Because if I'm not wasting my time doing freaking seller calls every week to a gazillion sellers just to give them an update of why they're sitting on the market and why their house isn't going under contract, how much more effective will I be if bam, 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 I'm done. I know that sucker's closing in 7 days, and I know I'm going to be able to take the right offer because I know that buyer can buy the house, and I know the loan is going to be able to be done because I have all of the information up front. I can be a better agent, more effective agent. It's just efficiency. No different than us using the internet and filling out our contracts on zip forms now. Instead of having to handwrite a contract. It didn't get rid of me. It just made me more efficient. We're helping people be more efficient.
Kind of like how I am with shopping. I do it all on Amazon.
Exactly.
I drive to stores anymore. So Tracy gets this. Thank you, Tracy. I'm glad to hear that you do get it and you appreciate it. So, you know, there is, going back to what Jeremy said, there is going to be a thinning of the herd. The strong will survive, but more so to what you just said, Sheila, I envision this in the near term future where the agents who are educated and have the certification to work in this world, which is required, and Jake, that's another plug to drop the link to go get the licensing, take the licensing courses. You get a discount if you use that link, because LCA did that with Consortia. I see what's going to happen here is Sheila, you got two realtors going into a listing presentation. You got Teresa and you got Sheila, and Teresa does it the old school way and Sheila does it the new school way. And they're going to have just a simple conversation of, here's my 25-point marketing book on how I'm going to sell your house. Sheila's going to walk in and be like, we're going to do this in the new world. We're going to close in 7 days, and it's going to be so much faster and so much smoother. And it's going to be like, I don't give a shit about all that other traditional marketing stuff that you have, Teresa. I'm going with Sheila. And I think that's going to create a massive competitive advantage. And this is why I'm passionate about this, sharing this with the world, just because I get it. And I think I'll get off that soapbox though, and say this, like here today, we have not as many people on this webinar, and it continues to get lower. And I think I'm going to explain this to you. So for those of you that are on this call, I applaud you, because here's the reality. I think a lot of people have joined these webinars. They heard a bunch of, for lack of a better description, Chinese, and they're all English speakers. And they said, I'm out. I don't understand. And I don't understand how this affects me. And what the way I just described it, because the way I describe everything is very primitive and basic, because I'm a primitive and basic human. And I think that's what you need to understand. Like, you might be sitting here right now. This might be the 5th webinar you've sat on, because that's mine. And I still don't fully understand it. And that's okay, but you're not quitting and you're not stopping, and you're going to keep pushing through, because here's the deal. The way I just described it is very easy to understand. If you have this bullet in your gun, it's going to make you a more successful agent, simply put. That's the way I would describe it. Would you guys agree with that? Naturally.
Yeah, we actually have agents doing it already. She's done videos for us that we're going to be posting, that her sellers are raving.
Who?
How Christina. Yeah. People are raving about how easy it is. So she's done a handful of them already. She's like, I can't believe how much better this is, because it's not anymore just more of a, like you said, marketing dog and pony show. Who can show that they're the best marketer. This is meat. This is like on the bone meat. Like, I'm going to save you money. I'm going to save you time. I'm going to make it easier for you and less painful for you, and more surety. And that's honestly what we all want. We all want more surety that we're going to make the money, that the closing is going to happen, that I'm not winging a prayer over here, hoping I'm going to make this commission, or hoping this, the seller's not hoping that their house will sell. And there's so many other things that we're doing with this. I think that we could talk about in other meetings, and some of the stuff that we're doing with Fannie and Freddie, where we're talking to national companies about, with different loan types, doing the renovations up front prior to the home closing, so that people can qualify for different loan types. We're talking about doing pilots where it's just, we're looking at how many ways can we help the consumer, make it easier for them, more affordable for them, whether it's Teresa and I working on the loan product, working on the ability to change loan products because of the qualification of the loan type for that asset. We're looking literally at digging up every little piece of this entire process and figuring out how can we fix it with the agent at the center. That I can guarantee you, that's the number one thing Teresa said to me when we met, is I made a promise to the industry to keep the agent at the center of this, completely focused on consumer protection, of course, number one, but the agent is the center. The agent is the one with the relationship. The agent is the one that held their hand through the process. The agent is the one that they can go back with secondary markets on the pre-foreclosures and the nods and the short sales, and, they missed a payment or whatever, and say, hey, Jeff, I'm just checking in with you. I want to make sure you're okay. Can I help you? Have you guys gone through a hardship? Can I help you, not lose your house? Can we help you refinance? Can we help you find a buyer for your house, and let me help you move to something more affordable? Just more dignity in the process than what we saw in the last round of foreclosures.
Which leads me into a segue. Actually, before I segue over to the whole minting, the NFT thing, I want to go back to Jeremy's question. You mentioned the AML, and I don't want to assume that everybody understands what that even means. How will it be affected? First of all, what is AML, and how will it be affected? Go back to that real quick, just so make sure we rewind. I don't want that to go right over people's head. They're not going to ask the question. I want you to explain that real quick.
And Teresa, when you do that, can you also add in the laundry list of laws that people need to be thinking about? Because that's important before we do Jeff's conversation about the minting.
You're muted. You're muted. While you're unmuting too, I also want to say, let's bring Christina on next month. And let's have her talk to us as somebody who's living it and breathing it. And thank you, Tracy, because you've got a good mentor.
Yeah, Christina is amazing. So AML stands for anti-money laundering. And it goes hand in hand with something called as KYC, which stands for Know Your Customer. So these are critical for us to start to understand. Usually in the real estate space, we haven't had to deal with this kind of stuff. I come from the securities world, originally out of business school, and this was big time. Like your customers, you had to scrub and know everything about them. And this is new to us in real estate because escrow handles good funds laws and the money comes from a bank that's already scrubbed for AML and KYC. So we as practitioners this never like crosses our pretty little heads ever because it's already taken care for us. The issue why this is important now is because we're getting clients who come to us and say, we want to settle in crypto, or we're dabbling in this world called non-fungible tokens, selling NFTs. And the joke in the world is NFTs are just a place to money launder. Like, I don't know how to say that more delicately. Like consortia uses non-fungible tokens as a pure utility. It's not like a store of value. It's like a data file. It's the least sexy way to use NFTs, but it works. It works to share data. Other platforms are using NFTs for money laundering. And the SEC actually is cracking down on that. I think, Sheila, this is where you want me to go with this, right? Are the rules about this? So the SEC is saying that most NFTs that are out there for sale are a store of value that are supposed to go up thanks to the work and effort of others. I'm naming the Howey test for those of you out there who understand like the rules that are cracking down in the blockchain and NFT space. Those are the laws. And it's very likely that all of this space comes under the SEC jurisdiction. So if you're an agent and you don't know who your customers are, and if you're selling NFTs and you don't have a broker license to like a securities broker license, like not only are you running afoul potentially of AML, KYC, so you're moving money for bad guys, but then you're also violating SEC laws. And when you do that, like good night, sweet prince, like there goes your real estate agent license, your mortgage license, your real estate broker's license. It's just not a good day at work, right? And these laws are really important. And to go to Jeremy's question, if we go to a global currency, so this sits under the Federal Reserve, the Fed coin, Fed now is part of the Federal Reserve. The Federal Reserve and the Treasury Department have something that's called FinCEN. So FinCEN is the place that like does and has the rules for all of the AML KYC. So all of this is going to go through AML protocols. And quite honestly, like what I've heard from my sources is all this crypto junk was a way to suck the dirty money out of the economy. And then incomes, they're going to slam in FedCoin, which is Fed now. So this has all been prescribed. It's been analyzed. It's a way to get rid of the dirty money so that basically it's becoming worthless. And you can see like with the indices is crypto is like falling on its face, that is the master plan. I own crypto and it hurts. Like I own Ethereum and I own Bitcoin. So I'm not untouched by this. Just sharing with you though, like how AML is playing out in all of these sectors of our economy.
It's interesting. And so going then forward to the question about how, and you know, we've talked about this obviously in ad nauseam and even offline, which is about minting properties. And that's kind of the next phase of kind of what you guys are doing. Explain that, because I think some of you listening to this, you might fall into a category of you might be a real estate agent or team leader or broker that could get in on this. And so explain that. Explain what it means to mint a property as an NFT as it relates to, and how that is applicable to what all we're talking about in the blockchain.
Totally. Sheila, you want to hit this one or you want me to start it?
Yeah, you can start, I'll finish up.
And by
okay.
the way, pay attention to what's about ready to get explained, because even if you still don't understand how this affects real estate, this is important and it's already happening. You know, Christina Swires has already done it, is doing it. And there is future implication, residual type income that could come from this. So pay attention.
Yeah, this is after all that AML KYC junk, like let's put that under glass. Like that's the uncool kid at the party. Like let's have her go away. This is the awesome part. Okay, so this is a ledger. This is the spreadsheet. This is the blockchain that banks and financial institutions are adopting, right? And what they want to know who has that connection with the homeowner. So you have sold property, I have sold property, Sheila sold property, Jeff has done mortgages. We want to say, I know this human who bought this house, and put that on the forever ledger about the property. You guys see like where this is going? So that if there's any question about that property, who do they pick up the phone and call? Who do they email? Who do they text? You are the hero of this relationship. You own that relationship for the life of the ledger. Oh, you want to retire? Awesome. Let me sell my book of business. I'm going to retire and sell it to Sheila. Sheila's a far better producer than I am anyway. They're going to have a better relationship. I'm going to sell my book of business to Sheila. The forever ledger, right? Here's my analogy. If you could go back 10 years and buy your digital footprint on Zillow, would you do it? Would you go? Would you go and own all the eyeballs for your neighborhood? Would you do it? I don't know. I would do it. I would do it.
I think everybody, I don't think anybody would say no.
And the thing is, so for out the gate, Consortia made sure to have integrity, right, of those relationships. Because I want on the ledger somebody who actually knows a house, not Zillow, just I'm going to buy up a zip code. And I know Zillow's looking under the skirt. They read our white papers all the time. Good luck if they can figure it out. Have fun. And then I don't have to do this business. But guess what? This is agent centric. This is for you, the agent who sold real estate. So you come on, you mint your relationship for $1 a property, $1 a property that you've ever sold. We want that whole map of the United States, 140 million properties. We want it peppered with every single agent who has ever sold a home on that map, because that is your relationship. That is your area of expertise. That's my promise to the industry.
And you don't have to worry about Zillow putting 3 other agents that they're making money off of to sell your lead back to the industry. So with Consortia, when you're minted onto the property, it's you. That's it. You are the one when secondary markets pulls that information to resell that loan, or to say there's a knot on this loan and we need somebody to go knock on the door. You are the agent that's going to be contacted. You are the agent that can have, like she said, the Zillow example, all of us went after Zillow, stars and all that stuff when we were doing our businesses. But that's not verifiable, true type 2 SOC 2 audit protocol information. You don't know if people had people write referrals about them on Zillow. That's not true proven data. Where when you look at our Consortia map, and I know you saw this, Jeff, where all those little pinpoints for Christina were all over St. Louis.
Mm-hmm.
And for you as an agent to sit down with a homeowner and say, these are the homes I've sold over my last 20 years as an agent, or over my last 10 or whatever. And especially for those of you listening that are mega agents or big teams, we have some big teams that sell 2,000 to 3,000 properties a year that are bringing all of their properties onto Consortia. You think Zillow referrals or Zillow stars are powerful? Imagine looking at a map of your city and you are everywhere, and it looks like you own that city when you're sitting in front of a seller. So you've got the front end of the actual presentation to the person you're working with of how you've dominated a neighborhood or dominated a city. Then you also have the ability to use that online with all your social media to promote yourself. Then you have the ability to be the one that's contacted by the lenders in secondary markets if something ever happens to that person. So you become what Teresa and I call the advocate. So we actually have a form we're working on with a lawyer that you as an agent would sign, that you are given rights by that person buying that home from you, that you are their advocate for life of living in that property, that you're going to be the one that's going to champion them and protect them if something ever happens in a hardship to them in the future. We're always looking to provide value, right? How valuable is that to be the advocate, chosen advocate for a property owner for the life that they live in that property? That's pretty powerful.
It's game changing. That's game changing. So as it as it relates to that, let's wrap up with that, and we can we'll get into that next month with Christina. What does that look like? So is there a certain, does like, if any agent, let's just say, Tracy says, "Oh God, I want to be a part of this. Do I need to be doing so much business in order to be included in this?" First of all, nope. Okay. So that's the simple answer.
One house. One
Okay.
house.
And then I think the best way to handle this, if anybody's interested in having a conversation with the two of you, you want to handle it like this: shoot me a DM and I'll connect you to the two of these ladies. And so we'll connect, because there's probably, we have not talked about this off air other than me connecting them to some of my friends in the industry, but I don't know most of you that are watching this. I unfortunately only know Jeremy. He's got a great wife, but Jeremy, on the other hand, I have the unfortunate pleasure of knowing. Just kidding, Jeremy. Just kidding. But seriously, if you're interested in learning more about this or having a conversation with these two, just DM me, reach out to me. If you have my cell phone number, text me, and I'm happy to connect you to them, because we want to get more of this. We want more of those pins throughout the United States. And I've already got one text, just FYI. So let's continue to grow that. And then I think the best thing that we can do is we're doing these webinars every month. And, a lot of it's going to be very repetitive, but at the same token, there's updates. If you've noticed, if you've followed along, something different is happening every month. Every month I bring these ladies on. They're like, "Oh, Jeff, check this out. This has happened." And I'm like, shit, like what more can happen? And it's just continuing, and it's evolving so fast. And so again, I applaud you for being on this today. If you're interested in this, just learning more, you got the link. Jake, drop the link in the Facebook post as well. You probably already have. So if you want to go back to this, he put a link to it. It's on YouTube. It's also on the LabCoatAgents Facebook page. I'll share it as well. And we'll make sure that we have the link to Consortia, so you can go take the classes, learn about this stuff. And if you want to learn about the minting, just shoot me a DM or a text, and I will connect you to these ladies, and we'll roll from there. Any parting thoughts before we wrap up and move on to next month?
I do quickly want to answer this question about HUD. Do you see a time where agents need to be HUD certified housing counselors? I think that is not a bad thing to add to your business. We may or may not be in talks with HUD to figure out how they can write more loans on houses. So I think that would be a great place to understand. And I don't need, full disclosure, I don't fully know all these rules. So I'm always kind of like, what's a HUD loan, right? But I think that you might want to look at like what the rubric is for how to sell a house with a HUD loan. When are those applicable? How is that important to your book of business? So Jeremy, I really applaud you for even thinking about that. That's the direction that we're going. If we're going to make these GSE loans much more competitive, then yeah, you should know all the rules about all the different loan options, so that when you walk through a house, and I'm totally deficient in this, you guys, like this is like even on my, like, I need to do more of this kind of list. Like as I walk through and I see something, Sheila knows this stuff. Sheila could be like, "Oh, that's not going to pass this mortgage." Sheila is like a genius on this. And I think that, like, to go into the earlier question, like who's going to be relevant in the industry, once you know, like, and Sheila and I, like, this is kind of crazy. We're literally writing the rules with Fannie and Freddie. Like, tune into these calls, because Jeff sees this happening. This is literally happening like week to week to week. Every conversation that we have with the government, guys, like, we can't ignore this. You can't just put your head in the sand much longer, right? Like, you need to tell your friends and be like, dudes, like, big changes coming up. How are we going to actually sell houses? Or does this all go to robots that can read all of this in those home scans? Because let me tell you, that's the direction this can very easily go. So I would say, like, you got to know your trade, right? You got to know and listen to these podcasts and say, like, okay, what's coming? What do I have to future proof for? So those are just some of my thoughts. I mean, like, I even struggle with it, you guys, as a practitioner. I struggle with the amount of data coming at me. I even look at my own book of business, and I'm like looking at how I run my brokerage, and I go, oh my God, my brokerage is obsolete. Most of the agents in my brokerage don't even know what's coming at them. I'm going to be honest. Do I think most of them are going to survive? I don't.
Yeah.
It terrifies me, to be honest. Like, if I wasn't me, if I was a regular practitioner, I don't know that I would have the tools to survive. Yeah. True story. It scares me.
Hey, on that note, we're going to wrap up. We will hope to see all of you next month. Ladies, we'll probably be talking later today. So it's been wonderful. Thank you guys so much. Last thing, by the way, Jeremy and his wife, they run Shantae, they run the NAREB events. And Jeremy, I just found you some speakers for the next event. I'm even happy to be on stage with them and ask the questions. So let's make that happen.
You're amazing. Thank you, Jeff. Thank you, LCA.
Thank you.
Hey guys.
Thank
Bye.
you.